Welcome back to the show. In our Spotlight segment today, we feature an exclusive interview with Rajiva Bandaranayake, the CEO of People's Merchant PLC. He offers his insights on microfinance, one of the most pressing needs in Sri Lanka today. And we asked Bandaranayake, who will resign from his post as CEO of People's Merchant PLC effective 1st of May, how much progress is being made in microfinance in the rural sector. Here's Rajiva Bandaranayake. Good to have you on Benchmark, Rajiva. Thank you for coming in to talk to us. Now, as CEO of People's Merchant Bank and with your state sector hat on, so to speak, what are the priorities in your role today?
Well, my priority had been to see the company through a period of consolidation during this financial year and also preparing the company for a growth phase for the new financial year. The priority has been to obtain a license under the Finance Business Act, giving it the ability to accept public deposits, to mobilize public deposits. On the business side of things, I think the focus has been to plan to grow the leasing and hire purchase business rather aggressively, to grow the portfolio. Then further to that, also to get into new areas of business such as spawning, margin lending, etc. And also to develop the fee-based income streams of the company. The other priority area that we have been concentrating on is to reduce the non-performing loan advances to well within the, try to bring it within the industry averages. So those have been the focus areas in the last few months.
So if we turn the clock back to your tenure in the Colombo Stock Exchange, close upon 2 decades, 18 or 19 years, I remember. How are you interpreting the most recent signals that are emanating from the Colombo bourse?
I think the market is in a stage of correction and consolidation. Now, markets are typically cyclical, and over the last 20 years I have seen this ups and downs in the market. I believe that investor sentiment will no longer be influenced by the IPO fads and the chasing of these illiquid stocks that we saw in the recent past. And I also believe that investors should now really focus on investing in the market more prudently based and looking at corporate earnings and looking at company fundamentals, as it were. We also must remember that there are the global factors which affected the outflow of foreign funds from our market, and the low demand for equity assets in frontier markets like Sri Lanka. Now, the worst performing stock markets globally has been the frontier markets in recent times, like Sri Lanka, Bangladesh, Nigeria, etc. And foreign fund managers, global investors have shied away from these frontier markets. If you look at developing emerging markets like China, Russia, India, the situation is very different in those markets. So I think the larger, more liquid markets are now more attractive.
Now, you did say that investors will no longer be driven by the IPO fads and the other trends that we have been seeing, and which actually sort of brought on the volatility. But do you think our investors are actually savvy enough? Are they educated enough to make educated, informed decisions when it comes to investing on the CSE?
I think there are two segments of this investing community. You get the high net worth, more educated, informed investor, and the corporate sector investor or the fund manager who would really understand the fundamentals. They know what they're getting into. But you also have a segment of the retail, typical retail investor, who needs to be educated, who needs to be guided, and I think some amount of advice and guidance is necessary for the typical retail investor, who are perhaps driven by the kind of sentiment driven investment pattern that we saw earlier. So that's where I think a lot of education, proper advice has to come in to support the retail investor segment.
So moving on to the state sector, Rajiv, of which you are now a part of, what are the major pros and cons that you see?
First and foremost, we must appreciate that we have a functioning state machinery. You know, water services are provided, we don't have power cuts, we have the delivery of the health services, we get our letters mailed to us. So there is a functioning state machinery. But the downside is that the process is inefficient. If one were to focus on the state sector and see what really can be done, I would think that we need to enhance the effectiveness of the public financial management of those entities, and also develop a efficient delivery mechanism to the people. Connected to that, I think there are certain strategic state enterprises which can play a more proactive role and a more complementary role to some of these essential services that are provided by the state. And also I think there should be more public-private partnerships being forged, because that can attract the necessary funding, the equity investments and the foreign direct investments.
What about allegations of widespread corruption, the politicization, the mismanagement that you see, and also the absolute waste? What can be done about that?
There are the issues of accountability and transparency is the simple answer that you can give there. That the government also needs to have in all of those state enterprises that measure of accountability and transparency built in, so that those allegations are then are not made.
There is a lot of rhetoric, Rajiva, about righting what is wrong, and these are some of the issues: the waste, the corruption, the mismanagement, the wrong people in the wrong jobs, etc. But it seems to be only rhetoric. Nothing seems to be happening.
I have not been exposed to that level of work in the state sector at all, but I guess it's a process where they need to correct some of these. To put, I think there are various initiatives to resurrect some of these ailing state institutions. Quite large number of them, about 140 institutions that are loss making. So how do you really turn them around? How do you restructure them and infuse some funding into them? So at that point of time, then these issues of accountability, transparency will come in as to how you really restructure these institutions.
We're going for a commercial break. Now, on the other side, Rajiva Bandaranaike focuses on SOEs, the development of SMEs and the devaluation of the rupee, as well as whether the financial services industry is playing its role in the overall economy. Stay with us. Welcome back. We now have part 2 of our exclusive interview with Rajiva Bandaranaike, CEO of People's Merchant PLC. However, there is a bright side to all this. The financial institutions in the public sector, like the state-owned banks, for instance, in the state-owned enterprise fraternity, have done extremely well according to the LMD State 20 rankings. All of them are up there among the top State 20 institutions. So what lessons are there for other state-owned enterprises to learn from these financial services institutions that belong in the state sector?
I think these the government banks have responded very positively to the forces of deregulation and globalization well. They have managed to respond well and overcome these challenges. And if you look at it, they face fierce competition from about 20 private banks. And despite that level of competition from the private sector, they still continue to be the dominant player in the banking sector, both in terms of deposit mobilization and loan advances and the asset base. So, and yet they make profits. So that's, I think, a success story. If you analyze the key success factors of those institutions, one is that I think they have modernized themselves, okay, in the recent past. They have been customer focused, and they have been able to build the confidence among customers over a period of time. Then they are also accessible to the public through a expanded branch network. Then they have also followed rule-based governance practices, which has helped them in their management, and maintain quality of budgetary and financial management. And they have also developed efficiency in mobilizing resources and revenue resources. And I think also they have been broadly, they have been more transparent and accountable in those institutions, publishing of annual reports and adhering to corporate governance, to accounting standards, and to the various regulatory requirements that that they are required to follow. So I think that has been the success factors in these two banks, enable them to compete probably very effectively with the private sector.
So do you think private sector competition is the answer to ensure that state sector enterprises actually come up to par?
I think it's a good thing because that will spur the state sector, and we have seen that in the banking sector, how the two state banks have really responded. If you really, even the offices, how they have modernized and been far more customer focused than say 15 years ago. So that has its advantages too.
So let's look at the SME sector, Rajiva. For instance, there is again much said on paper and in speech about how the SME sector can be an engine of growth, a driver in economic development, especially in this post-war stage. But is the SME sector actually dynamic and vibrant enough, given that we are now nearly 3 years into the post-war phase?
I think it can be developed a lot more, and it can play a far more vibrant role. I think there has to be a lot of other support services coming in to make SME or the microfinance sector far more viable in this country. That's one way you can really uplift the probably quality of life in the rural sector as well, and microfinance is typically one way even other countries have really reached out, and they have seen tremendous rural development taking place through these microfinance initiatives. The good thing is that more institutions like banks are getting into microfinancing and finding in that it's a success story. So I think that needs a lot of development and a long way to go.
So what do you think needs to be done to accelerate that dynamism, that vibrancy?
I think if you look at it from the perspective of the leasing industry, in recent times we have seen a lot of these companies getting into the SME sector, typically financing of three-wheelers and two-wheelers, and there's a huge potential and a market in the vehicle financing market if you look at the typical SME sector. And if you look at the repayment of those advances, I think they are excellent repayment on the microfinance sector. So it's a good business to get into. For the financial institution itself, the returns are there, the repayment is quite good and very low NPAs. So this is a lesson that is learned in going to financing to finance this SME sector. And more institutions we feel are getting into the microfinance and the SME sector. Even not only banks but finance companies and leasing companies also getting into those sectors.
Speaking of leasing, Rajiva, what is the role that the leasing industry and products and services can actually play in the whole macro developmental vision of for Sri Lanka?
I think post-war we have seen a boom in the leasing industry. Post-war, particularly with the opening up of the northern areas, we have seen a whole heap of vehicle financing and machinery being done by these leasing companies and banks, etc. And the leasing industry itself has had a boom year. 2 years been very successful, and going forward I think even this year the trend will really continue. So we have seen this construction sector also taking a lot of development in that area, and a lot of financing have been going into those areas, leisure, tourism, construction, etc. And commercial vehicles, private vehicles, even the SME sector like the two-wheelers, three-wheelers. So we have seen a fairly large movement that the leasing industry itself, banks, finance companies all put together, have been playing a fairly significant role in recent times in supporting the development effort in fulfilling the needs of the transportation sector quite effectively.
You speak of a boom. Now, how does the rupee devaluation that we have been seeing, the volatility of the rupee, actually affect this boom? What is the impact it's having?
Well, currency depreciation is inevitable, and I think it is the government has taken the decision in the best interest of maybe longer term economic stability. Now, the rupee has depreciated against the dollar about 6.7% for the year. Fairly significant, but I think it's inevitable, and this has been done. It's a fairly significant fiscal and monetary change decision that the government has taken in the recent past. So it will have its near-term or short-term pressures on inflation and interest rates, and that's going to trickle down to some of these aspects that we spoke about. For example, this interest rate hike will cause a bit of a burden to the borrowers or the people who take these advances. but I don't think it'll have any long-term repercussions.
Rajiva, when you look at Sri Lanka now in this post-war phase, is the financial services industry actually playing the role it should play in allowing this country or in giving this country the impetus to move forward and attain our goals?
I would think the post-war boom and the government's development plans require a fairly heavy rate of investment and funding, and I think it will be unfair to rely on bank financing totally to sustain this growth. So that's where I think capital markets and bond markets have to play a key role in contributing towards the development effort. We really cannot rely solely on the banking sector for our financing needs. So the capital market, I think the equity market and the debt market is also has to play a fairly significant role in meeting some of these financing requirements to fund our economic growth.
That was Rajiva Bandaranaike. The Voice of Business is up next.